Hi, welcome back. So we're going to talk about the market right now. So we're here in mid-February, around Valentine's Day, and it's a situation where springtime is springing. We are seeing a lot of loan requests right now. We're seeing a little bit more requests for fix and flip than we have recently, which is a good thing. That means our investors are out finding those deals and getting them under contract. We also are seeing a lot of long-term loans, DSCR loan requests, where our investors are now finishing up a rehab and are turning them into a long-term rental loan. We're seeing a little bit more uptake on those rental loans than we typically see. We have some of our clients that would normally sell a property, but are opting to keep that property a little bit longer and turn it into a rental. So that's a good thing. That's a good thing. We get to help them twice. So let's talk about the overall fix and flip market for a minute. Right now, rates for a fix and flip loan are around 10 to 12%, depending on the type of loan and what your experience and liquidity are in fix and flip lending. But most of our clients aren't really as rate sensitive as they are leverage sensitive, meaning the amount of money you can borrow or the amount of money you get to keep in your pocket and the amount of fees charged. So we've got some new special deals with some of our lenders just so we can serve you. So we've got some lower fee options now than we have in the past, so we can get you in and hopefully get those projects rehabbed and onto either a sale or a rental loan as quickly as possible. Now let's talk about the DSCR market for just a second. We are seeing some pressure that rates might want to move a little bit higher right now. Unfortunately, or fortunately, we're getting good news in the economy. So inflation's not quite coming down like the Fed would want, and it's a situation where people are able to have their jobs. So jobs reports are coming in a little stronger than everyone expected. So what does that mean? That means that maybe the Fed will keep rates higher for longer. So we got a little bit of a market reaction a month or so ago where people thought, okay, maybe a little bit later in the year, rates might start coming down. Well, I think people are saying it might take a little bit longer than we expected for rates to actually trend down. So right now you're seeing them actually go up slightly. And you can see that in the 5 and 10-year Treasury, which most of our lenders will benchmark their long-term loans off of. So take a look at those rates and you kind of see where things are. I will tell you that, we are seeing a situation where the credit criteria, which pulled back a little bit a few months ago, meaning LTVs. For a while, it was a situation where that 80 LTV where you used to be able to get it dropped down to 75 LTV on a purchase, or that 75 cash out now became a 70 max. Well, that made it difficult for some of our clients to actually exit some of their fix and flips. But I'm happy to say that if you've got the right credit scores, those leverages or those LTVs seem to be back. 80% for a purchase and rate and term refinance, or 75 for a refinance. So with that, again, rates are a little bit higher than you would normally see them. Right now, again, we publish our rate tracker. If you go to reinewsnow.com, you can see our weekly rate tracker, and you can see that for an 80 LTV loan, the best rates we have for a DSCR right now are around the high 7% range. And again, that assumes a certain structure to that particular loan. We do have lenders that will allow you to pay additional points or buy down that rate still into the 6s if that's what you'd like to do. Cost is a little more expensive than it used to be, but if you really have your heart set on getting a loan in the 6s, we can help you find a way to get that. So again, that's kind of where rates are currently. We do hope that by the second half of the year, we'll start to see some moderation in those rates. Some of the pundits that we hear from quite a bit are hopeful that these long-term rates can get back in the sixes and maybe even the fives later in the year. Not sure, but I tell you that when we started this business 5 years ago, rates were about where they are today. Those rental loans were in the 7% range. And we did a lot of business then. We continue to do a lot of business right now. Would I love for the rates to be back in the fours and fives? Oh my gosh, yes. But again, you like us, we deal with the hand that you're dealt, and you push through and you persevere, and I know you all are. The other thing I want to talk about is really what we can do for you. Situation where we have an awesome team here. Our customer satisfaction scores are off the charts, and I just would love the opportunity to work with you here in a future deal that you've got this spring. So if that's something you'd like to do, give us a call at 636-552-4710 or go to loanbids.com, take a couple minutes, put in your loan request, and one of our account executives will reach out to you promptly. So until next time, if you're really looking to have life-changing wealth creation, give us a call.